Weber, good afternoon. Thanks for joining us. What's your sense about the market? It's been a resilient market, but do you sort of prune short positions? Do you long positions rather? Do you get into cash, or is this a market in which you want to invest and stay 100% invested? And if yes, what kind of stocks?
No, of course, Anuj, not 100% invested for sure, purely because at this point in time, how we are looking at the markets are, but markets are actually trading in a very large band of 14,200 to 14,300 on the lower end to 14,900, 15,000 on the higher end. Having said that, it is also accompanied with a huge amount of data and variables, both globally and locally. When we talk about global data, I think we've seen the employment data, or affecting the DXY from the higher levels and now correcting back. And at the same time, you are seeing from an Asia perspective, Taiwan, performance of Taiwan markets as well. So there are mixed data actually increasing the volatility of the market apart from the domestic problems which we have. So it makes sense to usually stay pretty light into the books, not be too adventurous in these kind of markets, because short-term taking a call is pretty difficult. So while we stay in that band, we wait for that band to kind of break either ways to take a decisive call.
Okay, got that. By the way, the market's sort of heading to the absolute lows of the day. 160 points down on the Nifty. So there is sort of renewed downside pressure that's very, very evident. And the Midcap index has sold off big time. There's a 200-point drop. I mean, that's a sudden gash. When we started the show, Anuj, Midcaps were flat, I mean, at the index level. And now there's a lot of concern that seems to be building up. I mean, if you just look at the price action.
Surabhi, like we discussed at the start of the show, midcaps, outperform when you don't have a breakdown risk in the market. I think below 14,700, the breakdown risk is happening once again. Look, I again say this is a market in which, you should keep your emotions in check on days when the market is up and when the market is down. It essentially is in a range. And if you played the range smartly on the index, you have made a lot of money. But the key is to identify those points. And key is to identify the rejection of the marks, both on the upside and on the downside. Like yesterday was that mark. Yesterday was clear that the markets had rejected that level. Now, who knows at lower levels? Let's see where it settles. But this is essentially what range-bound markets do, Surabhi. You have these kind of days.
Sure, absolutely. Take that point. Vaibhav, good afternoon. Hope you're doing all right in these challenging times and keeping safe and healthy. So, till there's some clarity on what the market wants to do overall, I mean, what's the strategy? And you look at long, short, both sides. So what are the longs for you, and what approach are you going with in terms of sectors?
Sure. So Surabhi, I think again the way we are looking at is basically when the markets are too volatile and kind of not taking a pretty good direction, and there's a huge amount of uncertainty, then we'll stick to those kind of sectors and companies which on one side has because of the results season has upgraded in terms of the numbers. At the same time, we typically also see that during uncertain period, we generally find that pharma and the likes of defensive kind of perform much better. So if we look at this current scenario, those sectors which are globally exposed, where we are getting consistent upgrades, and pharma, where because of the pandemic, there is huge amount of revenue visibility for many of those companies. We are continuing to see some amount of interest, and that is where we'll probably be keeping our bets at least for the short term. But once things kind of stabilize, I think the construction and the constitution of that rally would change dramatically henceforth. So you have to be pretty agile and quick in kind of spotting those kind of trends, because the sector rotation is likely to be pretty quick and fast. Thus, short-term trading at this point in time looks a little difficult, and that's why you kind of keep your books very, very light.
Okay, now let me just extend that argument just on the metals, Weber. Say stocks like Tata Steel. Do you have it in your portfolio? Do you intend to add it, or if you have had it, Are you looking at already booking profits here?
So Anuj, I think the way again, when I said that globally exposed sectors, and that includes commodities and metals, right? And in those sectors, we on a tactical basis keep on holding some amount of position, but that again is pretty kind of renting rather than owning type of situation, right? So we may keep on renting it at regular periods of intervals, but to take a structural call for 2 years or 3 years, it's kind of a little difficult. So at this point in time, we are positively inclined to any of those kind of sectors, including metals and commodities.
Okay. Vaibhav, I mean, wise men say that you should buy in despair, in times of despair, in order to make big money. So I'm just wondering, when it comes to, urban discretionary demand, whether it's cinema halls, travel and tourism, discretionary spends, are you buying anything at all? Because it just seems such a long way off when we'll have that normal sense of life again. But then would you buy, anticipating some normalcy at some point?
So at some point in time, definitely would be a sector to look at. But at this point in time, if you ask me, it is best avoided. See, if it's a long-only fund and have the liberty of time to hold on for a very long period of time, of course these sectors would be pretty attractive and warrant some attention. But for a fund like us, who are long short and who believe in opportunity cost of every rupee invested into the market, either on the long side or on the short side, for us to take a call on these sectors, it generally gets a little difficult looking at the short to medium term. So we will wait for things to kind of stabilize, see those kind of numbers come down, see the economies get back to business as usual. It is when then probably, after probably some amount of rally is something we would maybe looking at those sectors.
Okay, by the way, there's a bit of a slam dunk in the market now. The Nifty not only broke, the Bank Nifty not only broke 32,500, broke 32,400 as well. The Nifty is now below 14,700. In fact, 14,650 is under test now. And just look at some of the metal names in the last 15 minutes. Nalco, SAIL, JSPL, Tata Steel, JSW Steel, all of them are seeing a sharp amount of profit taking right now. The other stocks seeing decline is Voltas, which is down about 4%. So Vaibhav, before we let you go, what would be your top short ideas in this market, since you run a long short fund? I mean, I'm sure you won't give stocks, but any themes where you think there's good enough opportunity to short?
No, honestly, Anuj, it is extremely difficult to short purely because we don't see a structural kind of shorts, purely because the way I said that immediately if the market or the numbers of the COVID kind of stabilize across the country, you may see an equally sharp rebound or short covering as well. You don't want to get caught doing something shorts aggressively, and also it doesn't augur well to short probably in these kind of distressed times, right? And it would be probably hazardous to do at a time when the inflection point can be seen on the other side. So honestly, it's very difficult to at this point in time to find a structural one.
Okay, Vaibhav, got that. Thank you very much for joining in and weighing in on the market. The market's mood has soured quite